people need to realize that, you're doing a real estate transaction, right? But you're also doing a securities transaction. So there are, as you said, there are federal regulations of, if you are going to be raising money from passive investors, you have to be aware that you're selling a security as well as buying a piece of real property.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. Today I have Peter Fishcer, and the funny thing is that I have known him for years, if not a decade at least. And Peter and I were just talking about how I actually have never had an opportunity to have as extensive a conversation as we're about to have right now. And I just find it very funny because we've been in the same circles and done the same and been involved with the same people literally for, I think, a decade. And so let me read Peter's bio, so to welcome him here. And let me share with you the website, because I have now been sharing, because this is on, Peter, you may not know this, but this will be also on Roku TV and YouTube. So people will be able to see what I'm seeing on my screen. So there is Peter. That was you as a slightly younger man. That is the Peter I remember, by the way, just so you know. Right? And he is a real estate lawyer, just to give you the sort of high level of who he is. He's also a super lawyer, according to superlawyers.com. Peter R. Fishcer is a partner with Sklar Kirsh, LLP, and a member of the firm's real estate and corporate departments. He's an experienced commercial real estate transactional attorney whose clients include developers, operators, syndicators, private equity providers, investors, and lenders. Peter's practice involves all aspects of real estate industry, including acquisitions, dispositions, equity investments, syndications, fund formation, development, joint ventures, leasing, financing, including Fannie Mae, Freddie Mac, and the EB-5 transactions. And he routinely works on transactions involving multifamily, assisted living, construction, industrial, office, raw land, as well as mobile homes and self-storage. I'm sorry, Peter, is there anything you don't do? I think there's the list of what you don't do might be shorter than the list of what you do. In the corporate realm, Peter focuses on private mid-market M&A matters, stock and asset transactions, fund formation, syndication, and private placements. Peter represents a broad range of companies, funds, investors, and entrepreneurs, and also counsels his clients on crisis management. Consoles your clients. Sometimes you console them. Yeah, I'd be one of those clients you need to console recently. I'm just, we all have our ups and downs, and I had a down. I need some consoling, truly. My CPA, though, is the one who's primarily consoling me these days on this.
Right now,
yeah. Yeah, that really was a loss. Yes, we're really going to do that. Let's see. Peter began his career in New York as a project and bank finance attorney with Sherman and Sterling, and then moved to Latham and Watkins, yep. Representing financial institutions and private equity funds. After relocating to Los Angeles, which he now lives in Venice, Peter joined Shepard, Mullen, Richard, and Hampton LLP, where he represented borrowers, sponsors, and later practiced with Loeb and Loeb LLP in that firm's entertainment finance department. Peter helped launch the transactional practice in Einstein. Nope, say that word for me.
Einstein. It's like Einstein.
It's like Einstein, but it's got an N in front of it. So
that's right.
Einstein. Flam and Glass, APC in 2010, where he practiced for over 7 years before joining Sklar and Kirsh. Peter lives in Venice, that I can say. Peter lives in Venice, California with his wife and young son. In his free time, enjoys taking pictures, sailing, surfing, and traveling with his family. And so here we are on the Sklar Kirsh website. It only took me, 5 tries? Peter, welcome to the show. So let's start with the basic question, Peter. Why would such an outgoing, energetic, kind, young man, as clearly you were and you still are now as an adult, because that's how I know you to be, become a lawyer? Not that I dislike lawyers or anything, but
You could say attorney. There's less jokes when you
an
say
attorney. Is there less jokes about that? Okay, cool. Why don't you
No,
tell
I
me?
mean, after college, I thought I might want to go to law school. I was interested. I majored in political science. I was interested in sort of politics and the law, sort of ethereally, generally. But I wasn't sure, so I went to Japan instead. And I
Okay.
thought, if I go abroad and I do something different and I still want to be a lawyer, then I'm meant to be a lawyer. So, and I applied, got in a couple places right out of college, but I really wasn't sure. So I went to Japan for a couple of years. And I think it was in my second year there, I decided, yeah, I better, apply to law school. So I applied again from Japan, which was an interesting process in and of itself. And then came back and went to law school in DC. So kind of got that, I was always interested in sort of international business and international law. So I went to law school in DC and worked for the Export-Import Bank and the SEC and did some other amazing things that you can only do if you're in a place like Washington, D.C.
Washington, D.C. Yeah. So why Japan?
Well, I had taken French and sort of been around people who understood and spoke the Romance languages. And kind of as I was growing up, my dad had a very good friend who married a French woman. So, but when I got to college, I kind of we had a language requirement. I wanted to do something totally different. And I loved Japanese food. And I had started taking martial arts, so it was Japanese or Chinese, and I chose Japanese, and the rest is history.
The rest is history. Okay. And why then transition from the job that you did get into real estate? How did that transition happen for you?
Yeah, so I worked at large firms in New York for the first 7 years or so of my career. Doing international project financings and working with banks that were financing toll roads in India and large telecom deals in Argentina and what have you. And it was exciting, and I worked with a lot of international people, but it wasn't really approachable for me. And then fast forward, I met my girlfriend at the time, my wife now, and she wanted to move to LA. And she said, are you coming? And I said, well, I guess I'm moving to LA. And so once I moved to LA, as everybody knows, it's more of a middle market town, sort of a little bit smaller business community. And I actually started when I moved here. One of the first people I met was Jeremy Roll, sort of pre-FIBI. I started going to his little round table groups. I think you might have gone to those as well, but I kind of started just getting to know people in town and getting really interested in individual sort of, doing more things for myself and locally. And that was my first real interest in real estate was through Jeremy and through, what became FIBI. And then I worked at Shepherd Mullen here in LA, and I worked on the LA Live transaction and really got to see from the ground up, how a project sort of comes to fruition. It's, how it's planning and then watching it being built and watching the transformation of downtown. And so then I was hooked.
Yeah, LA Live was an amazingly complex project. I mean, not only was it complex in its initial design, it was complex in its implementation. If I remember correctly, it almost got hijacked in the middle.
Absolutely. And it was, parking garages and naming rights and all of these pieces, theater, LA Live, the Nokia theater. I mean, so it was amazing to watch, not only from the business side, but for me, the lawyers and how they put these pieces together and counsel, clients. And so it was that's when I kind of moved my practice into, more into real estate, and then, later fully almost into real estate.
Yeah, I was gonna say, because it's, since you work for a larger firm, you actually don't completely control everything that you're assigned to, but you do, I've noticed, intentionally cultivate real estate clients, right? Like
Yes,
you yourself in your own, like, where do you spend your free time? Is it real estate meetings? I happen to know because I've seen you there, and
right.
I've heard of you presenting at other FIBI meetings, which we talked about before we got online. Like, I knew that you had presented at South Bay, but I had not known about the FIBI meeting and the West Side meeting that you had also presented at. And so I know that you cultivate connections with the real estate field.
Absolutely. And not only do you not sort of have control over your time at a big firm, you really don't, which is why, I eventually left the big firm life and I started my own firm, which I then, sort of morphed into the real estate and corporate practice at what was then a litigation boutique. That was prior to joining my current firm. But, I purposely and I wanted to be more entrepreneurial, and I was starting to move my own sort of focus on the investing side into real estate. And so, that just didn't sort of fit with what I was doing on the legal side at these big firms. And so, eventually I just became more of an entrepreneur, who happened to be a lawyer, right? And so between moving out of big firms, briefly having my own firm,
Mhm.
and now working at a sort of boutique, smaller firm, I'm able to focus my practice more, and I do. I do some corporate as well as real estate, but the corporate work is usually focused on something having to do with a real estate client. So
Okay. I just want to confirm for you and for our audience here that this is the members of the boutique firm.
I guess not so boutique anymore. We've grown small to yeah. Probably
Yes,
right. We can't call it a boutique anymore.
I just don't, yeah, no, there you are, right there, right? And I just wanted to say, like, this is a boutique firm, but I guess more of what's important about the firm is that it's, it seems like it's incredibly competent, and you guys have experts, small groups, right, that are truly experts in the particular area. When I looked at the website and I saw that it really does target specific areas, they understand who they are and what they're doing and what team needs to be doing what, right? And so I can see how that would be more boutique-like versus a general firm that tries to be everything for everybody.
Yeah, and we don't have hundreds of lawyers, and we don't a lot of firms will have a partner and six associates on a particular matter.
Right. It's true.
My firm is we have more partners actually than associates, and so when a client comes in, they generally get to work with the partner, but at the same time, if there's stuff that associates and paralegals can do, and save on the billing rate for the client.
That's right.
And the other thing is, we don't have a lot of red tape. If I'm needing to bring in a new client, I pick up the phone and talk to the managing partner. I don't have to go through a whole committee and six different people, and so it's a very entrepreneurial place. Easy to supportive of people like me who want to build their own businesses. I've rarely had an issue with bringing in particular clients, although just like anywhere else, as the firm grows, there is some pressure to increase billing rates. But it's a lot easier to mold your own practice than if you're at a, Sherman and Sterling or Shepherd Mullen or somewhere like that.
Yes, and those, it can be very difficult to mold your own practice at those. I mean, just
Yeah.
having talked to lawyers in those locations. So tell me, what is it about, I mean, other than real estate serves your own personal investment portfolio, tell me more about what it is about real estate that draws you to it and why you're such an expert in that area.
Yeah, I mean, I think like probably most other people, as I was growing up, through my family and relatives and my own investing, I had stocks and bonds, and I have a 401k, and I have mutual funds, but I never. I mean, just look at in the middle of the pandemic right now, how much the market has gone up. It just I never got to a point where I truly, and maybe there are people, but I don't truly understand all of the functions and things that affect, the price of a stock. And sometimes I think they're completely arbitrary.
And they are sometimes. I mean, I'm not an expert, and I can already tell you they're completely arbitrary.
And I can't,
some of them.
I can't see a stock. I can't go, touch a stock, and like with LA Live, I can't see this thing rising out of the ground and understand how it's going to draw people. And I think between having a tangible physical asset and also, of course, all of the, working in the field and all of the reading and expertise I've gotten, it's just something that I understand more. Everybody needs a place to live. So it's a combination of, I think, now having worked in the industry for so long, but also being drawn to something that is, I think, more local and more physical and tangible. Like Hunter Thompson, who's a client of mine and a FIBI alum or member, he tells this story about
he was a facilitator. He was a FIBI facilitator for a while.
Oh,
so
that's right.
Not only was he Jeremy, he went to the same Jeremyville meeting we all went to. He also was a FIBI facilitator for a while, though currently he's not, but he was for a while.
And he tells a story about his aha moment of when, he heard a program on the radio about how stocks were going to go down because of something happening in the markets in Greece.
Right.
He was like, what? Well, how? Why does that affect the price of tea in China?
Right. So, or at least the price of tea in America.
That's exactly what it is. There's so many intangible things and things that can go on in the world or not go on in the world that affect the price of a stock and the market, like what's going on right now. Whereas I can look at a real estate deal and a piece of real estate, and just get a much better sense. And a lot of it is local. I know a lot of the players. I know a lot of the sponsors and syndicators who are doing these deals. I know what to look for. I can pick up the phone for things that I invest in. I can pick up the phone and talk to the people who run the multifamily project or whatever it is. And that's very comforting for me. So I think that, it's all of those things.
So when you do a multifamily deal, let's start with that one first, and then maybe I'll ask you a little bit about funds. When you do a multifamily deal in Los Angeles, what are you finding are the primary concerns that you feel like people need to be aware of?
Well, I would say, number one, a lot of my clients and a lot of my own investing is not in California.
Okay, very good. Yes, that is correct. My investments are not in
obvious
California.
Reasons, pricing, cap rates. I think the sort of landlord, California is a tenant favorable state,
yes,
which is not a bad thing. It can be difficult to understand where eviction laws, and things are going to go, which I think is why a lot of people who are even based in California invest outside of California.
Yep.
In fact, I don't think I have any California investments at the moment.
I don't either.
Yeah.
And I don't intend to continue to invest in California's political / litigious environment.
That's right. And look, I live in Venice, and between homelessness and other things going on here, it's challenging, right? Having said that, there's a lot of people obviously who've made a lot of money in San Francisco, and elsewhere. But I think majority of our clients probably are not investing in California.
Okay. So there isn't necessarily a list of things for a multifamily investor to be cautious of that is on the top of your mind because you're more familiar with other states' codes than you are with California's as far as like recent research.
Yeah, I mean, I think that there are obviously things in a multifamily property that you would look for generally, and then California has its own layer of things. I think the landlord-tenant laws in California is, one of those things that's at the top of that list. There's other things depending on where in California you are. There's coastal commissions. There just seems to be a lot of red tape and taxes in California.
And taxes.
Red tape and taxes.
Red tape and taxes. Yeah, California's kind of known for that. So when you're working with somebody putting together a fund, because I know that's also one of the things you do, is you will work with people, sponsors who are looking to put together a fund. Tell me a little bit about what you find is truly important in that, because that's managed not just on a state level, but managed on a federal level. So talk to me more about that.
Yeah. So gosh, I could go on for hours about.
Okay, good. I found a good one then. You've got a good at least 5 to 10 minutes on that.
Oh,
so go for it.
I think one of the main things, and this is true for any syndication really, people need to realize that you're doing a real estate transaction, right? But you're also doing a securities transaction. So there are, as you said, there are federal regulations of, if you are going to be raising money from passive investors, you have to be aware that you're selling a security as well as buying a piece of real property. I think just, from the business side, a lot of people are like, oh, I'm going to go, form a fund and raise a whole bunch of money and go buy a bunch of properties. But, there's obviously, you have two hats, right? You're going to have to be doing these acquisitions, but then you're also going to have to be raising a whole bunch of money. And those are very different jobs, and they're both can be full-time jobs. And also if, you don't have a track record and you haven't raised money for, 1, 2, 5, 10 individual syndications, it can be challenging to raise a fund. And if you're not raising, $5-10 million, I don't know what the minimum number is, and depending on where the properties are going to buy, it's probably not worth it.
Mm-hmm.
You're probably better off building up your track record and doing individual syndications and sort of amassing an investor group, and loyal followers, if you will, to get to a point where you're kind of ready to do a fund.
Let's dive into that for a minute, because I actually get that question reoccurringly. Christina, I own single families. I've got some friends. They're telling me they want to invest with me. We want to do something together. I need to go get a syndication, right? I need to go get a fund together. And I'm like, no, wait a minute. No, hold on. There is a distinct difference between what you can do as a joint venture with people that you know and an actual fund structure, which allows you to raise money from people who you do not know. But you have a huge amount of responsibility to those people you don't know. So if you can cover legally those differences, because I get that question often.
Yeah, the distinction is really whether, you're going to be giving your investor or investors control. So if, the way I always describe it is, if somebody comes to you and they say, here's my check, here's my $10,000, whatever, $50,000, take my money, make me a return and just give me distributions.
Right. And I actually have people who say that to me.
Right.
Here, Christina, here's my da-da-da-da. All I care about is that you send me a check. I don't care what you do with it.
Right.
I'm like, okay, but I need to securitize it, because I need to do that for me, for my own business integrity and ethics, right? So I securitize them to something.
But compare that to, hey, I'm going to write you a check, but I'm also going to tell you what properties you can buy, what financing is okay for you to get on those properties, when you can sell them. So, right, I mean, the more influence your partner has versus, when you do a syndication, typically your LPs, your limited partners, just write you a check, and then you go do everything, and you hopefully make distributions to them.
Right.
So that's kind of the distinction. If you're taking money from people and they're totally dependent on you, that's when you cross over into the world of securities and needing not only to have a real estate attorney to do that transaction, but somebody who understands securities, so they can understand, the federal regulations of the securities laws. And if you're doing a joint venture and your partner has control, then, and obviously this is not legal advice, but it's generally where the control piece comes in. You're not selling a security, and then you don't have to come against that federal overlay.
Okay, so let me ask you some questions. Let me try to differentiate this. So let's say there's 4 dudes who want to do a real estate investment. They want to buy a property together. They're all taking different roles in doing it. Somebody's focusing on property management. Somebody's focusing on the legal, the paperwork behind. Somebody's working on maybe tenants' rights or managing the tenants, and somebody's working on raising finances and being responsible for staying in touch with the bank, right? Paying the bills. So but they all have a role, they all have a duty, which means they all probably have decision-making rights. That's not a fund.
Well,
that is
it's the answer is what you always love to hear from your lawyer, which is it depends. But the key is not, are they active in the business? The key is the control. Like, so who gets to say it's time to sell this property? Do all 4 of them have to vote on that?
Okay.
If they want to get a loan, do all 4 of them have to approve that loan?
Okay.
The active part is good, and that's certainly when you have passive LPs, they don't play a role at all.
Right.
But the real key is the decision making. Okay. So you could have somebody who's doing property management who still doesn't have a say in anything, right? When the property is sold, or who gets hired to do the legal work, or the CPA. So the key is really those decisions. And if all 4 of them have a role and they're all managers or general partners, then again, most likely that's not a security, and you don't have any the worries of Reg D or all those things you hear about.
All right, so the next scenario is this guy's been a long time active investor, and he's got 3 friends who want to invest with him. They're going to buy an apartment building, right? So he's going to make all the decisions. They're going to write him a check, and they want distributions, but they don't want any voting. They don't care about voting rights. There's no conversation for them about voting rights. Now what are we looking at? Because now we've got 4 participants.
That's the quintessential syndication structure and securities. I mean, that's where people get into trouble, when they don't realize, hey, my 3 friends are writing me a check, and even though I know them, right? Even though maybe they've invested with me before, they're still not doing anything, and they're still dependent on the one guy to buy the property, develop it, whatever it is, right? Sell it. So that would be a securities transaction, even though, now we can get into the whole discussion of, does he need a private placement memorandum? What does that mean?
Right, let's talk about that. So there's the fund, there's a syndication, but then is it a fund, right? Because there's a distinction between the two. Is it, I drive my languaging right?
A fund is really, I mean, it's sort of like, what's an SPE or what's a joint venture, right? I mean, these are just words that people use.
Yeah.
A joint venture usually is an LLC or a limited partnership, but it's a, venture between 2 people or
jointly.
2 entities. So it's a joint venture. But, I think when people think of a fund, they think of it as a multi-property syndication. A fund, though, is really just a word like a joint venture. A fund is an LP or an LLC. It has to be an entity, right? So, but a fund, I think people usually use that word to mean a syndication that is doing more than one property.
Okay. So there's no legal distinction between a syndication and a fund then?
Not really. I mean, a syndication, a fund, it's kind of like a rectangle and a square, right?
Okay.
A fund is a syndication, but a syndication is not necessarily a fund.
Thank you. That's lovely. That's actually ideal. That's a perfect description, because then when you get into a fund, then you do have to do the PPM, the private placement memorandum, and some version of financials. And then you have all these things that wrap you up as far as what marketing you're allowed to do, what marketing you're not allowed
Right.
to do. I mean,
That's
all this
right.
stuff starts to come into play when you're a 5-0 filled in for me. It's a 5-0.
506, probably 506B or C.
506B
Those
or
are the
C.
two most common exemptions that people
Right.
use.
So that makes sense. All right, if I may, I'm gonna hijack the conversation based on partly based on time, and I'm gonna ask you about real estate investing. So you
Sure.
are personally a real estate investor as well as a real estate lawyer, which is a perfect hybrid, right? Because it's like I'm a real estate investment consultant and I'm a real estate investor, and my consulting and the news I get on the street from my clients definitely supports me in my personal real estate investing, and the other way around. My personal real estate investing experience supports my clients in them maybe not making some of the same choices I've made in the past. Maybe they can make a smarter choice than the choice I made, or I can tell them what did work, right? So being a lawyer and being a personal investor, obviously they support each other beautifully. So when did you start doing your own real estate investing?
I started doing my own real estate investing shortly before I moved to LA. And before I was a real estate lawyer, and I got introduced to syndications before I knew what a syndication was, and before I knew what to look for. And I had some not so great experiences, which very challenging, financially, but a good learning experience.
And they've done that. Yep, that's right.
Had I been in the field and experienced in reviewing documents and talking to sponsors and understanding what a good sponsor and a bad sponsor was, I never would have made those investments. But that's unfortunately or fortunately how you learn, right? So
it is. I have a person who runs an investment fund. It's got both assets, stocks and bonds in it, as well as real estate. And it's I've been talking with this person for years, and it's interesting to listen to the thinking and how important his thinking is in running the assets. Very, very different from maybe my thinking or somebody else's thinking that I've been able to hear in another client, right? So it's very different because the PPM doesn't tell you all of that, right?
Well, it's like I always tell my clients, I can draft the best PPM for you, or as an investor, right, I can look at a PPM of a sponsor and it can look totally beautiful and sure, if you have a sponsor and they don't know what they're doing and their documents are bad, that's a sign.
Right.
But you can have the best PPM, and if you have a sponsor who's going to commit fraud, it doesn't make a difference, right? It's not, it's the end all and be all. Maybe I'm talking myself out of work, but it's not the most important thing, right? Is not to have beautiful legal documents. It's researching the sponsor, understanding their strategy, asking the appropriate questions of, okay, this IRR, is it a net? Is it deal level? Is it investor level? And listening and speaking with other people who have invested with those sponsors.
Yeah.
I didn't know any of that. And I didn't even know what to look for in the legal documents when I made my first syndicated investment. But that's, and now I do, I draft them and I look at them from the side of the investor, and obviously those things help each other. But I still tell my investor clients, the most important thing for you is not the deal, it's the person that you're investing with, or the team.
Period.
So,
irreplaceable.
Focus on that first.
Yep.
And, yes, the terms of the deal and the return and the waterfall, they're all important. But if you don't have the right person and you're not aligned with how that, what they're buying, how they look at the real estate world, I mean, you're in the wrong deal.
Yeah. And I can't say ditto to that loud enough. Just because the advantage of the documents, which I read mine, I read every page, I read all 80 pages of both documents, the PPM and the LLC, and I read all the pages and I read all the marketing material and I do all the phone calls, and the phone calls are about, to me, it's does the syndicator, the person who's running the deal, or the persons that are running the deal, because they're often 2 or 3, right? Even know what's in their documents? Do they know what they've agreed to? Do they understand what they've agreed to? And do they understand how that asset needs to work? And so that really is the core of my questions. The documents is just one supporting hub over here. And then there's their history is another supporting hub over here. And then there's fraud checks and background checks is another hub over here that's around that team. Because that, and so paperwork is necessary. I keep telling my clients, the only thing you can sue on is the LLC agreement. I don't care what the marketing says. I don't care what the phone call says. I don't care what they've told you verbally. The only thing you can sue on is the LLC agreement. So you want to make sure all of that stuff is consistent to the LLC that Peter put together, right? Because that LLC agreement is the thing that's going to be deciding the success in court or not. Right. So it's very important. So you're not out of a job, Peter. I'm sorry. You have to continue to make LLC agreements because we need to continue to have something written, that forces us to have a clear conversation about what the expectations are on both sides. Right. So absolutely necessary, but only part of the hub. So as an investor, what do you primarily keep inside of your portfolio and why do you choose those?
Well, someday I'll buy my own properties.
Okay.
But my day job has not allowed me really the time to focus on that. So look, I invest in things that I have on my desk, every day. So I'm invested in mobile home parks. I'm invested in self-storage. I actually have a retail investment in Canada. I look at, I'm invested in multifamily. The things that I prepare and look at and draft and understand on a daily basis.
Makes sense. So you invest in the team and the paper.
That's right.
Not direct ownership, but like I understand the papers, I understand the team.
And I worked, just as an example, I worked for one sponsor team that I'm invested with. I was their, it was my partner's client at my last firm. And I worked with them and I saw every deal for 4 years. And I saw how they interacted with their investors.
Right.
I saw what they did when there was an issue.
Yeah.
I saw how they interacted and treated their lawyers. And so, and at the same time, and during those 4 years, I worked with, hundreds of other sponsors and saw what they did not do and what the differences were. And I've invested with clients. I've invested, with Hunter and other people I've met through FIBI and Jeremy. Matt Owens is one of the first people that I put together a syndication for, and which I invested in. And I, went down to Manhattan Beach and met him at Bill's Pancakes. And again, I knew where to find him.
Yeah.
He answered every question that I had, and that I knew other people were going to ask, and he respected the process of putting together the paperwork and understood why it was needed. And that was a foreclosure fund in Memphis. And it was supposed to be 2 rounds of foreclosures. And after the first round, he saw what was happening in the market and he closed the fund. And I went, but you're supposed to make double the money. And but it was important. He said, this is the right thing to do. I don't know what's going to happen. I could get fees for another couple of years, but his main goal was protecting investors.
Yeah, if I can't earn the money and protect my investors, what's the use of continuing to take
and
take
the other thing was he didn't want to just do one deal with these people. He wanted, these people to be his investors for life. And it was absolutely the right thing to do. And for me, it was like, wow, I know your mindset. I know where to find you, and I know, you've got really good paperwork. So,
I happen to know you have great paperwork because I put it together.
that's right.
Absolutely. And I think that, so tell me, what are one of your bad stories? Like, what is one of the bad stories that you have in real estate investing?
Well, the worst story is probably the beginning syndications, before I knew what to look for.
Right.
And, before I understood really what, a sponsor was and what my role was and their role was. But, and even then I kind of, when I met with the principals, this was a deal that was shown to me by somebody who I respect, who I still respect, a mentor of mine. So I just sort of said, oh, well, if so-and-so is doing it, I'm going to do it too,
Yeah.
without really understanding it and knowing, but I had met with the principals, and there was something weird about them, something salesy, but I was like, oh, Dimitri's doing it, so I'm going to do it.
So I'm going to do it. Exactly. Yep. My
And
mentors,
that
yep,
was a mistake. I didn't trust my gut. I didn't know enough to know that my gut was right, and I didn't know, what the sponsor would, what all these things were. But and it was very challenging, and I didn't, I didn't have a ton of money. I was just starting out as a lawyer. So it was very significant to me when my $25,000 investment, and I got no distributions, and then I got no communication. And then I got like a little bit of communication. And, oh, just wait 6 more months because we're doing this. And it was very, very challenging. But I learned a lot from it. So,
what did you learn?
Well, the main thing I learned was it's about the team, right? I mean, just because your friend is doing it, and it wasn't that my mentor, this guy Dimitri, had invested with them before. It was just sounding good to him, and so I, didn't know enough. So I thought, well, if it sounds good to Dimitri, it sounds good to me. And I didn't know what to look for in the documents. I didn't know, what to look for as far as fees. I didn't know what to look for as far as waterfalls. So I learned all of that and more, now drafting those things.
Right.
But really, I should have just said, you know what, this doesn't feel right. I didn't know all the right questions to ask, but the questions I did ask, I wasn't satisfied with the answers. But I thought, well, Dimitri knows more than me. So, and you know what? Even if he had known more than me, if I hadn't done that deal because that didn't feel right to me, that still would have been okay. So I think, I learned not only what to look for, but I learned to trust myself and really, when you're interviewing, not even when you're talking to somebody who you're going to give your money to and it doesn't quite feel right, it probably isn't quite right.
It is biasing. And interview is the right word in my mind. I definitely interview the team that I'm going to give my money to. So you continue to use real estate, even though you've had real estate investments go south on you. You continue to use real estate for your financial freedom. Why use real estate and not either something else or even like an IRA, right? Why use real estate that has risks embedded in it for your financial freedom?
I haven't found anything else that provides cash flow and an upside that I understand. People keep telling me about Bitcoin. I don't understand it.
Right.
I get the theories. I watch Tesla stock and what that's doing, but there's no, combined with the tax benefits, there's nothing else that, for me, and look, there are other syndications that I've invested in. So, I kind of dabble in those fields, but I invested in a internet startup syndication that didn't go so well.
I invested in an Amazon seller that so far seems to be doing fine.
Well, there's lots of, people make money in all kinds of ways, but for me, I think I've just gotten an understanding of real estate, so much. And I think, look, clearly real estate doesn't always go up. There's lots of problems. But I've gone to countless wealth managers, and even, I have a family trustee, and you go to them and you say, well, I'd like to do this syndication. Oh, we're not set up to look at alternate assets.
Yes, that's
okay,
correct.
Well, I
Yes.
know these things backward and forward, right? And you're looking at Market Watch and CNBC and trying to watch shares that you follow, right? But I follow real estate syndications all day, every day. So to me, that's not an alternative asset, right? I mean, it's so.
It is what you know.
Yeah.
Well, that makes perfect sense. So what will you're still building your financial freedom. What does it mean to you to want to build your financial freedom versus just having a job until you're done and you let your pension plan pay you? Why? What does financial freedom mean to you?
Well, I think the ultimate thing about financial freedom, it's not really about a dollar figure. It's about control of your life. And, I'm at a firm now, it's more entrepreneurial, but I'm still sort of beholden to the billable hour.
Right. Still trading time for money.
If I want to make more money, I've got to do more deals. I've got to spend more time. I mean, yes, I can bring in more clients, and the firm has origination credit, and there's other components. But basically, as a lawyer, I need to spend more time working to make more money, and that is not ideal, right? I mean, I would love to be running buildings and or other assets that I can go to sleep and I can wake up and I will have made more money.
Right.
And again, to me, it's not about making the money, but it's about the freedom that provides. And look, I think in this day and age, if you don't have multiple streams of income, you're doing it wrong. So. I mean,
I love that basic philosophy. If you don't have multiple streams of income, you're doing it wrong. And that's sort of on both sides. Like there are lots of real estate investors who are retired and real estate investing is their only form of income.
That's right.
And then there are all these people who have a job who don't do investing. And therefore the job is their only form of income.
That's right.
Like, dudes, like get them both done because
That's
that
right.
was what will make the deepest impact in the long-term financial freedom of your life. That's what I'm hearing you say.
I mean, I think for me, in an ideal world, I'd still be able to be a lawyer because I like being a lawyer, but I wouldn't have to be. And I could, have maybe some main real estate investments, but then also, maybe look at Bitcoin or maybe, look at a startup every now and then. But, those aren't areas that I'm an expert in. So I tend to gravitate towards what I know.
All right. Thank you, Peter, for your time and your expertise.
Well, thank
and
you.
Your knowledge. And thank you for sharing both
me.
on a professional level and a personal level. I really appreciate it. And so this is Christina with Real Estate Breakthrough Show. You can tune in each week on YouTube, Roku TV, iHeartRadio, Spotify, and a variety of other platforms. Thank you so much. See you later.
Thanks again.